Hello and assalamu alaikum everyone. A very warm welcome to the Advanced Audit and Assurance Webinar to Success Day 2. And I am your tutor, Kashif Kamran. And these webinars are for exams in September 2022. Now we have a very important agenda on hold today and just want to put that in front of your screen before proceeding further. Now, yesterday being the very first day, I focused on the new developments which has taken place in the AAA paper ahead of the September 22 exams. I did focus on how you can boost your 20 professional marks in the AAA paper. We had a discussion on the time management, student number 1 versus the student number 2, and then the right study planner, which you should follow in the last 14 days ahead of your exams. Now, today is the second day, and I will be investigating the September 22 mock exam. And on the day 2 today, day 3 and day 4, the focus is on the September 22 mock exam. The question number 1 comes today, and then the 2 and 3 comes on the day 3 and day 4. I will give you lots of insights about the mock exam. We do lots of discussions around the topics, marking scheme, how to write, the do's and don'ts, and we'll be giving you lots of tips and techniques around each question from an examination perspective. So let's start the journey. Let's start the day 2, and let's take a focus on the very first question of the September 22 mock exam, which is available on the practice platform. So welcome to the day 2 of the webinar to success for Advanced Audit and Assurance for September 22 exams. Now, let's start with a look inside the question number 1 of the mock exam before I just take you to the practice platform and we start investigating the question carefully. Now, first of all, we know that the first question in the mock exam for September 22 focused on the audit risk, procedures, and a current issue. More importantly, there is a new statement which you all must have seen by now. This is a new statement on materiality, which is now published in the partner email to the manager. And this statement was available in the specimen exam for September 22. Then it was in the 3 practice exams for September 22, and now in the mock exam as well. So I will be investigating this statement on materiality, which is now given in the partner email, and what exactly you have to do with this statement on materiality by the partner, and how would you be reflecting that in your answer. Secondly, the 10 professional marks we have in the first question, including the communication skill, how would you be getting most of the 10 professional marks inside the question number 1, and changes in the marking scheme. Are there any changes? I need to be very clear on that today, and I need to bring the clarification on that today, exactly what the changes are, because again, there are a lot of misconceptions among the students asking for clarity for the marking scheme. So that's where the question 1 would come in today. We'll be focusing on drafting, reading, planning, writing. We'll be focusing on materiality. We'll be focusing on professional marks. We'll be focusing on the marking scheme as well for the very first question. So let's start investigating the very first question, and we'll keep coming back to the presentation and keep going to the practice platform. So I'll just keep popping in and popping out of the platform to my presentation, and from my presentation to the platform till the time we complete the very first question. So let's start looking at the practice platform. I hope you can see the practice platform on your screen now. Please confirm that. You can see the mock exam for September 22 right here. I hope you can be assured of that, all of you. Please confirm. Okay, great. Now, let's start this exam and let's start looking at this situation. And I will be drilling it and will be giving you lots of beneficial tips and techniques. So you need to note them down very carefully. Now, I'll be putting my camera off for a certain time so that you can see the screen effectively and nothing gets distorted on the screen. So wherever my camera is needed, I'll put it on because you can hear me. So I'm just putting my camera off so we can do a very proper analysis of the question number 1 in this mock exam. Okay, let's start the journey. Now, whenever you open the very first question in exam hall, we did discuss the time management yesterday, 195 minutes, and you have 80 technical marks to go with. Now, if you are a student number 1, as per the time management discussed yesterday, you will have 24 minutes of a reading and planning time. And if you are a student 2, as per the time management discussed yesterday, you will have 20 minutes for reading and planning the very first question. Now, considering I'm the student 1 looking at 24 minutes of a reading and planning time, where I can see a main screen giving me the information about the case study. And then on the left panel, I can see the exhibits, the requirements, and the response options. Now, because you practice at home before you get to the actual exam, so you exactly know the interface, you exactly know what you will be opening first and what you will not be opening. Where are the requirements, for which exhibit you need to open for requirement, what you need to read first, what you need to read second. That order and that pattern must be set at home. So that pattern is to be set, and that's very critical because you cannot go in the exam hall and on the 5th of September, you decide what to open first and what to close, which window to open, which window not to open. Now that will really affect your time management. So you should be assured what you will be doing first. Now, very firstly, you know that everything you need to write it on a briefing note. So you'll open up your response option window and you keep your response option window open on the right-hand side of your screen. And before you start writing anything on your response option window, let's read the main screen in front of us because that reading will just take 1 minute. So out of the 24 minutes, the very first minute will be utilized reading this particular screen over here, this screen, just 1 minute. Now this screen will tell us it is the 1st of July. So we are standing at the planning stage. You are a manager. We always are a manager in the AAA paper. And we are the audit manager for the Dumont company, which is the audit firm. And you are assigned to the audit of the Bransfield company. So the name of our company, which we are auditing, is the Bransfield company. And they have an year end of 30th of September. Year end is important, 30th of September, because there could be lots of events given in the question number 1, where you need to decide whether it is an adjusting event or a non-adjusting event. There might be an application of IAS 10, not necessarily it's in every question, but sometimes you need to judge whether this event took place before the balance sheet date or after. So you should know the year end, which is an important information. Your firm has been responsible for the audit of Bransfield for the last 4 years. So it's not a new client. You are doing audit of this company for the last 4 years. That means you have lots of knowledge. Then the examiner tells us there are 4 exhibits given on the left-hand side of the screen. The first exhibit we always know is a partner email. The second exhibit we always know is a business background, where most of the risk will come from. The third exhibit in most of the AAA scenarios is the financial statement. And the fourth, I even discussed yesterday that the fourth is a particular exhibit where the examiner wants you to do something important. Always in the AAA exam, in the question number 1, the 4th exhibit or the 5th exhibit, whichever is the last one. Over here, the last one is the 4th. So see, the last one is giving us something about the climate-related risk. So always be very particular about the last exhibit, because the last exhibit would be something very special where the examiner will keep a certain requirement in the email. And the first 3 exhibits will always be the partner email, the background information, the financial statement. Yes, the last exhibit will be something special, and the examiner would like to draw an attention to something very important in a sort of a requirement in the partner email. And that here is the climate related risk. Now, this screen, which I read is just 1 minute of your exam time. Even if when you read at home, you can imagine you're just taking 1 minute here. Now, I just need to open up my briefing note before I start answering my question. I'll write over here my rough working, and I'll just delete this rough working after I complete my answer. And in the rough working, I'll just write the year end of the company. The year end is 30th of September. So I exactly know if I need to incorporate some adjusting and non-adjusting events. And this is the 4th year since audit firm is auditing, since the audit firm is doing audit. So for me, this is the two critical informations, rough working, and I'll delete this rough working once I complete up my answer in exam. Okay, I'll go now and open the partner email, because the partner email is the first exhibit which you should open, because this will tell you that you need what you need to do. So you open up the partner email and you structure the partner email on your screen, and you look at the partner email. What exactly is the partner telling you in the email? So let's read the partner email. Now, I on the briefing note, I will write answer to question number 1. Answer to question 1. So examiner knows that from this point onwards, I'm starting to write my answer. I can just underline it. And I know that I need to answer the question number 1 in the format of a briefing note. So I'll immediately put the heading briefing note, because that's something assumed, and that's something you are mentally ready for when you're preparing yourself for the AAA paper. So briefing note. Now let's read what's in the briefing note. To the audit manager from Finn Drake, the audit partner, subject audit planning for Bransfield, date 1st of July. Now I know when I start my briefing note, I need to start my briefing note exactly the same, to, from, date, subject. Now I exactly copy this because it's an email from the partner to the manager. So I copy this, Control C, I bring it under my briefing note here, Control V. Now to, from, subject, and date. This is exactly what you're doing under the reading and planning time, right? You're structuring. Now, because it was an email from the partner to the manager, now I am writing back. I am a manager and I'm responding back to the email in a form of a briefing note. So the from will become the to, and the to will become the from. So I'll just copy the from, Finn Drake, and I copy the from into to. I copy the from into to, and I cut the to into the from. So I just swap. I swap the to and from. So to becomes the partner now, from becomes the manager. So I've just swapped the positions of to and from. So it's to the Finn Drake, from the manager, subject remains the same, date remains the same. So you're writing this email back on the 1st of July. Now we know in the briefing note, you need to write the introduction. We'll write the introduction shortly. And after the introduction, you need to do what the examiner is asking you. And at the end of the briefing note, you need to have a conclusion. So at least you can set this briefing note before even starting to read the requirements of the partner email. So copy the header of the partner email, to, from, subject, date. Just swap the position of to and from, because you're writing back to the partner, and you are structured your briefing note within just 1 to 2 minutes. Now let's read the partner email and let's see what the partner wants me to do. The partner says, hello, I have provided you with some information in the form of the number of exhibits, which you would use with the planning of the audit of the Bransfield company for the financial year ending 30th of September. Based on the analysis I have done on this industry, it is appropriate for the overall materiality to be based on the profitability of the company. Now, this is the statement I was talking about. This statement has started to come from the specimen exam for September 22. And this particular statement has become extremely important when you're preparing yourself for the September exam. It is appropriate for the overall materiality to be based on the profitability of the company. So the partner is telling me that you have to base the materiality on the profitability, not on the total assets, not on the revenue in the question number 1, because the partner believes that that is more appropriate. So you need to base your materiality on the profitability, and you need to tell the partner that this is my conclusion of materiality, because we know there is a range of profitability, 5 to 10% of the profit. So which materiality will you decide? 5% of the profit, 6%, 7%, 8%, 9%, 10%, because there is a threshold, 5 to 10% of the profit, profit after tax. So we need to be sure, sorry, profit before tax. So we need to be sure which percentage are you taking. So I'll just tell you what you need to do with the statement. So the partner is telling us it is appropriate for the materiality to be based on profitability of the company. I just copy the statement and put that down under my introduction, because these are important statements I need to remember. So I just copy these statements, which I need to remember when I start writing my answer. This is what I am doing under the reading and planning time. So in the reading and planning time, I'm just copying something which is important. Okay, second, I require you to prepare a briefing note. I've already started making that. Number A, using the information provided in the exhibit 1, 2, 3, not 4. So will you be making use of the exhibit 4? No, you will only be using the exhibit 1, 2, 3. So you need to find the audit risk from the 3 exhibits, not from the 4th one. There will not be any audit risk in the 4th one, because the examiner is saying exhibit 1, 2, 3. You will be wasting time reading the 4th exhibit for the audit risk. So the first requirement, what the examiner wants me to do is to evaluate the significant audit risk, evaluate significant audit risk. That's the first requirement. And how many marks have been given for that? 23 marks. So I'll do a planning, how many risk I need to write. A requirement. Examiner is also telling me in a note number here, which I was mentioning on my day 1 yesterday, that you need to look at the signpost. Now, this is a signpost note. You are not required to consider the deferred tax consequences of the share-based payment scheme. So you're not considering the deferred tax consequences of the share-based payment scheme. If you are going against the instructions of the partner. And if you're going against the instructions of the partner, you are losing the communication skill marks, because the partner is saying, I would not like to see any deferred tax consequences of the share-based payment. So when you are evaluating the share-based payment, you will not be considering any deferred tax consequences of that. Otherwise, it will be inappropriate and you will be going against the instruction of the partner. So be very watchful of the notes, be very watchful of the signpost. I did mention that on my day 1 of the webinar. So we have total 23 marks, and we should not be focusing on the deferred tax consequences. In the B requirement, you need to design the procedures in the B requirement, which is very typical in the very first question, and procedures on the share-based payment expense, number 1, and procedures on the deferred tax asset. So we need to make procedures on the deferred tax asset, and we need to make procedures for share-based payment expense, and we total have 9 marks. So it's up to you how many procedures you want to make for share-based payment and how many procedures you want to make for deferred tax. You can make more for one, less for the other, but in total 9 procedures. And I have to make procedures on share-based payments, and I have to make procedures for the deferred tax asset. So in total, how many marks I have for procedures? 9 marks. So in total, I have to make 9 procedures. Now it's up to you for which you want to make more and for which you want to make less. The total has to be 9. Okay, let's go to the C requirement. Now the examiner tells us using the information in exhibit 4. So for the C requirement, you are not looking at any other exhibit. You're only looking at the 4th exhibit for the C requirement. And you have to discuss how climate-related risk should be considered by the audit team during the audit of the Bransfield company. So we have to consider how the climate-related risk would be affecting our upcoming audit and how I will be considering that as an audit team. You are not required. See, again, this is a signpost. And in exam, we are in so hurry that we overlook not, and our answer becomes wrong, and we are losing the communication marks. If something is mentioned that you should not do this and you are doing it, you are losing your communication marks. So examiner is saying you are not required to consider the impact of the climate-related risk on the audit report. So you're not considering any impacts of the climate-related risk on the audit report. Apart from that, you can consider any other thing for climate-related risk on the planning and performance of the audit. So examiner is more interested to know how the climate-related risk would impact the planning and performance of the upcoming audit, as simple as that, for 8 marks. So climate-related risk, and its impact on planning and performing audit. Planning and performing audit, that's what I need to do in the last part, 8. And for the safety, I can just write that the entire information here will come from Exhibit 4. And for the question number 1, evaluate the significant risk, I can just write in the bracket that the information will come from Exhibit 1, 2, and 3. Now I've read the partner email. I'm closing the partner email. Now see, I'm ready. This exercise up till now, realistically should take not more than 6 to 7 minutes, including the very first minute you spend reading the screen on the right. Now, out of the 24 minutes, approximately 6 to 7 minutes must have been gone. You're remaining with another 17 minutes in which you have to read through the Exhibit 2, 3, and 4. Now, just before that, listen to me very carefully. I hope you are very clear with the rough working I put at the top, which I will delete at the end of my answer. Year end is 30th of September, and you know the purpose why I put it down. 4th year since the audit firm is doing audit, I will be giving you relevance why I put that down in my rough working. Sometime we come across the question number 1, which says it's a new audit line, right? Sometime we come across in the question number 1, this is a recurring audit. We are doing it for the last many years. And that information is helpful in certain context. Then I start my answer to question number 1. I put the heading briefing note, to, from. I swap the position of to and from the partner email. Subject remains the same, date remains the same. I need to write the introduction of the briefing note still, and the briefing note has to end with a conclusion. So that's 2 things you have to fill up. Then in the A part, you're doing significant audit risk for 23 marks. In the B part, you're doing procedures for 9 marks on share-based payment and deferred tax asset. And in the C part, you're looking at how the climate-related risk would impact the planning and performance of the audit, 8 marks, and from the Exhibit 4 only. There were 2 signposts. One signpost was, we are not considering the deferred tax consequences of the share-based payment. And the second signpost was that we are not considering the climate-related risk impact on the audit report. I hope you remember that. Now, considering that, you're ready for the start to read the exhibits. Now, first of all, examiner is telling us that you need to base the materiality on the profitability number, right? So where will be the profitability? Where will be the profitability? The profitability will be in the exhibit number 3, which is the financial information. So I immediately open the financial information and I look at the profitability of the company. Okay, we have profit before tax right here. I hope you can see the profit before tax number here, 145 million for the current year for which I am doing the audit. Projected September 20x5. 145 million is the profit number. So that is where I need to base my profitability, materiality at. So $145 million is the profitability number from the exhibit number 3. So it is appropriate for the materiality to be based on the profitability of the company. The profit before tax is $145 million. So I copied this information from the exhibit 3. So I know that my materiality is to be based on $145 million. I'll take the percentage of this 5 to 10% shortly. Okay, now, firstly, let's write the introduction quickly. Whenever you are writing the introduction of a briefing note, the introduction is what you need to do. What is the objective? So I quickly write my introduction in 2 sentences like this. The purpose of writing this briefing note, is to evaluate the significant audit risk in planning the upcoming audit of the brand's field company. Full stop. Further, this briefing, further, this note also consider audit procedures on share-based payment and deferred tax asset and also how the climate related risk would affect the planning and performance of the upcoming audit. That is it, 2 sentences. And in 2 sentences, you are telling what is the purpose of writing this briefing note. So I wrote my introduction. Now I know that after the introduction, the partner wants me to base my materiality on profitability, and then the partner wants me to do A, B, C and write a conclusion. So conclusion again will just be 2 sentences, which I will tell you how to write a conclusion. Now, you know that the first question consists of 10 professional marks. Where are the 10 professional marks? It's in the requirements. If you open the requirements, the requirement will tell you professional marks will be awarded for demonstration. Now, this is something you already know in the exam, so you're not opening the requirements because this is something you must have practiced back at home. So you're not wasting time opening the requirements. You know by default that the first question consists of the 10 professional marks, and they are to be awarded for the demonstration of communication, analysis and evaluation, professional skepticism, and commercial acumen. So this is something you know. So it's waste of time that you're opening requirements and looking at them because you've already seen the partner email for what you need to do. And you already know there are 10 marks. Communication skill is important in the first question because that's not available in the other questions of the AAA paper. And that's where we are putting the briefing note in focus. Okay, let's start the first proceeding. Now try to understand this new statement by the examiner on materiality. How will this be impacting your upcoming exams and how many marks you will be getting for this? Now, I will do an analysis on my Word file and I'll come back to the practice platform writing up the answer. So I'm just taking this briefing note, introduction and everything on my Word file for a minute, and I'll come back discussing reading the exhibits. So just you need to wait for 10 minutes before I come back to the practice platform. I hope you can all see the Word file in front of your screen. Please confirm that, which will be shared with all of you. Okay, great. Now on my Word file, we are writing the answer. We are doing the question number 1 from the September 22 mock exam. And I'm just putting up what I put on the practice platform. 2 from subject date. We got an introduction. And under the introduction, the partner told us that the materiality is to be based on profit. Then we have to evaluate the significant risk procedures on 2 areas. And then we had the climate related risk and discussion, and finally our conclusion. So this is how things are looking like. Okay, now let's understand the first thing. When the partner is telling you that the materiality is to be based on profit, this is a new statement. And I hope you have got clarity on this by now, but I want to refine it for the sake of your upcoming exams. Now, under the introduction, you will write a heading, materiality, like this. You will write a heading, materiality, before you start ABC. Now, the partner wants it to be based on materiality. How much is the materiality? $145 million. $145 million. Now, you pick up the $145 million materiality and you start to write a statement here. Now, listen to me very carefully when I'm writing this statement. And if you have any questions, I'll take them after 5 minutes on this particular statement. Now, how are you writing this answer? You are saying the materiality is to be based on profit before tax for the materiality is to be based on the profit before tax of the Bransfield company on the range of materiality, for the profit before tax, that is 5 to 10%, 5% to 10%. The lower end and the higher end, the lower end and the higher end of the materiality is, and you calculate it, materiality is, open the bracket, $145 million, $145 million into 5% and 10% is equal to $7.25 million dash $14.5 million. So you're telling examiner that based upon the lower threshold and the higher threshold, 5 to 10%, the materiality is $7.25 million to $14.5 million. Now that's the range of materiality. Now look at this statement. So you found the range of materiality on the profit, 5 to 10%. So you found the 5% at 7.25 million, and you found the 10% at 14.5 million. Now that's the range in which you need to find the materiality for Bransfield company. Now look at my justification. Now, if any student put a full stop at 7.25 million to 14.15 million, you are just fetching your technical marks because you're not justifying which number will you be using for Bransfield. Will you be using 7.25 million? Will you be using 9 million, 10 million, 11 million, 12 million? Which figure? You already got the range, but have you tell examiner which value will you be using out of the range? If you just put a full stop here, you're just fetching your one technical mark for materiality. You're not fetching the professional marks. You're not fetching the marks for your judgment here till the time you give the basis. Now look at my basis. Being an existing client for the last 4 years, the materiality should not be set at the lowest level because the audit firm has accumulated knowledge of business. This is not the first year audit, right? They have accumulated knowledge of the business and its system. They know the company, right, for the last 4 years. So it should ideally not be set at the lowest level, which is 7.25 million. However, considering there are changes. Now, when you read the exhibit number 2, where you have been given a background information. Now, in the background information, there are plenty of risks which have arose during the year. And when you look at the financial statements in the exhibit number 3, you will see that there has been lots of increase and decrease in the financial statement numbers. Now, looking at that, I'm just evaluating something. However, considering there are changes in the financial statements, which I saw in the exhibit number 3, however, considering there are changes in the financial statements and number of risk specific to the upcoming audit. However, considering there are number of changes in the financial statement and number of risk specific to the upcoming audit, the materiality level should be selected between the low and the high end. Thus, I cannot select the low because it's not the first year audit, right? But it has to be selected somewhere between the low and high. So the materiality level should be selected between the low and the high end. Thus, a materiality level of $10.15 million is appropriate bracket being 7% of the profit before tax. So I didn't took 5% of the profit before tax because it was not the first year audit. I even didn't took the 10% of the profit before tax because that must have been very high, considering there are lots of changes in the financial statement and lots of specific risk given by the examiner. So I've just choose 7%, keeping it in between the low and the high end. And look at my basis. See, I hope you're all clear with that. Look at this base here, being an existing client, number one. Then I'm saying, however, then I'm saying because. Look at these statements. I tried building my grounds that I'm not choosing the lowest level, and I justified myself. I'm not choosing the highest level. I justified myself. I thought about the changes in the financial statement. I thought about the changes in the risk given in the exhibit number 2. And then I concluded that it's better to keep it somewhere in between 5 and 10%, and I choose 7. Now I'll be using this as a threshold for materiality right across my answer, wherever I has to judge something is material or something is not material. Now, I will fetch 1 mark here, which is technical, because I determined the materiality level, but I will also fetch at least 1 mark for exercising judgment, full stop. This is my professional mark. At least minimum 1 professional mark will come out of it. Look at this. Are you all clear with this? Do you have any questions so far and so forth? Yes, it is mentioned, Rahul, in the question that we need to calculate materiality on the profit basis, right? So that's the reason we are calculating it on the profit basis. Apart from that, any other question on the drafting I've done so far? You have 2 minutes to raise any questions before I move on and get to the next element. If it is the first year audit, then you will keep it at the lowest level, 5%. Hanan, it's very difficult to say there are no changes in financial statements. It's like unrealistic. Do you believe from the last year to the current year, the business keeps static? Honestly, tell me, Hanan, do you believe business keeps static from over the last year? In the last 12 months, there will be no changes in sales, profit, expenses. So I think that's quite an unrealistic statement, right? Rahul, I justified 10.15 million because I took it between the high and the low ends. What is the low end, Rahul? The low end is 5%, right? What is the high end? 10. So I took it between that. Look at my statement here, between. I don't want to keep it low. I don't want to keep it high. Rahul, why I didn't took the low? Because it's not the first year audit. Why I didn't took the high? Because there were number of risk. There were number of changes. So I have to take something in the middle. So I decided the middle is 7%. Yes, that is also fine. But see, the materiality threshold, Tanjil, the materiality threshold has to be in even number, 5%, 6%, 7%, 8%, 9%, 10%. You cannot say, I will take 7.5%. No, not at all. The materiality numbers have to be even numbers, 5, 6, 7, 8, 9, 10. Is that clear, Tanjil? Yes, if you just calculate the materiality and you don't give the basis, you will fetch only 1 mark. You will not be fetching the professional marks then, right? Yes, whatever you are writing so far, you're fetching marks, right? You already fetched marks for materiality. You already fetched your marks for putting the format of the briefing note, right? Yes, now see, these are assumptions. There is no end of the assumptions. If you're auditing a client for last 10 years, for last 9 years, still there will be changes in the financial statement, right? Suppose you were auditing the Bransfield company for last 8 years. and there were changes in the financial statement, there were risks given by the examiner in the case study, then I would have taken like 8%, 9%. I would have increased from 7. But so this is the 4th year audit. So I tried to be a bit more skeptical, not keeping it high, not keeping it low, somewhere in the middle. But I tried justifying myself. Whatever materiality level you decide should be justified. No, you cannot take odd numbers, 7.5, 8.5, right? Never. Materiality is 5 to 10% of the profit. So it has to be 5, 6, 7, 8, 9, 10. Okay, now just stop your questions and answer my question. If it is the 1st year audit, will you keep the materiality level at which level of materiality will you choose? If it is a 1st year audit, tell me, 5 to 10%. Which percentage will you use? 5%, 7.25 million, wonderful. If it is like the 8th year audit, 9th year audit, 10th year audit, will you go straight away to 10%? Or you will still be taking somewhere like 8 or 9? Never take 10%, right? Never take 10% because there will be risk in the question. There will be changes in the question, right? Never take 10 because changes will be there. Changes will be there. If it is like the 3rd and 4th year, even 5th year, it's better you take something like 7%, 8%, sounds more realistic, right? So this is how you need to do it. Now, there is one more clarification, which I will be giving you over the next 1 hour or so. If there are certain adjustments when we read the case, suppose we read the exhibit number 2 and exhibit number 3, and there are certain numbers which needs to be adjusted from the profit of 145 million. Should you find a materiality on the basis of an adjusted profit or not an adjusted profit? Now, in an exam pressure, even if you find a materiality on the profit number given without adjustment, see, I just took a profit number 145 million and I didn't adjusted it because I don't know what's happening in the exhibit number 2 and 3. So exhibit 2 and 3 is hidden from me. So I just took my number 145 given in the financial statement and I worked on my materiality. Now, if there is any adjustment to be made in the profit number, which adjusts the profit number, my materiality would revise. But in the exam, you will be rewarded if you just took the unadjusted number and you concluded on the unadjusted number, because the conclusion on materiality, what is material and what is not material, will not change even if you take the adjusted numbers as well in the exam paper. Right? So if you don't want to determine the materiality on the adjusted profit, that's not an issue. You can still go on the unadjusted profit. Your answer will not change accordingly. Yes, I'm just answering that question, Darshan. Now, when you start answering the significant risk, you will just be relating the risk with the level of materiality 10.15%. Any risk which is above 10.15 million would automatically become material, and any risk which is under 10.15 million will become immaterial. I hope you're clear on that. So is everyone clear and sound? Should I proceed further? Is this something new for the upcoming exams, the materiality statement by the examiner, by the partner in the email? So the partner is saying, I want the materiality to be determined on the profit. So you put a statement on materiality right under the introduction. See, right under the introduction, you put a statement on materiality where you're fetching 1 technical mark for determining and calculating the materiality and 1 professional mark for justifying the basis. So technical plus professional going together in that 1 paragraph. Is everyone sound and clear? Should we proceed further towards evaluating the significant risk? Okay, now listen to me carefully. Evaluating the significant risk. When you're evaluating the significant risk for 23 marks, you must be knowing as a student by now, and you look at the marking schemes of the recent exams, maximum 3 marks are available for materiality out of 23. Maximum 3 marks, from which 1 has already been taken, right? This is the one here. 1 technical mark, because this materiality calculation has been done for evaluating the significant risk. So it's part of those 23 marks. So out of these 23 marks, one technical mark has gone here. So we're already left with 22 marks. Now, we know there are like 3 marks for materiality in exam paper for audit risk question, right? So if we just do a rough calculation, here, 23 marks minus the 3 marks, which is allocated for materiality, in a risk question, you are left with 20 marks. And knowing the fact that if you look at the recent marking schemes, up to 3 marks are available for each risk. I will be telling you if there is a 2 marks risk in exam once I start writing the answer, but most of the risk in exams are now worth up to 3 marks because most of them relates with accounting treatments. So 20 marks, and each risk is worth up to 3 maximum marks is equal to 20 divided by 3. You need to write 7 or 8 risk. If you write 7, it's like 21 marks to be on the safe side, because there could be a possibility that a certain risk you're writing is for 2 marks. So it's better writing 8 risk. And that would be the best answer you're producing. So first of all, whenever you see the marks for audit risk in exam, or you see the marks for risk of material misstatements in exam, simply deduct 3 marks from it for materiality. From those 3 marks, you've already taken 1 mark right here when you wrote this very long paragraph on materiality above. So 23 minus 3, you're left with 20. Divide that by 3, you get 7. Write 1 extra, 8, and that's a better perception of writing significant audit risk. Is that clear to all of you? Is everyone sound with this analysis? Before we start finding the significant risk, and we look at the definition of a significant risk, and we determine how you prioritize the significant risk, right? Now, one thing is, how would you prioritize? Because that prioritize is, how would you prioritize? Because this is part of professional marks. You will get professional marks if you prioritize, right? So that's extremely important. So what is the technique to prioritize? I will be guiding you today, and you will be amazed how easy that is. Is everyone clear with the marking scheme allocation? Is everyone clear how we found 7 to 8 or 8 risks to write? And is everyone clear that a prioritization of the risk is important, because the examiner is saying significant audit risk. So whenever the examiner says significant, the prioritization becomes really important. Are you all clear? Please, a quick answer from your side would help me proceeding further. Okay, thank you so much. Okay, now let's go to the case study. Let's investigate the risk, and let's start taking a more careful analysis. I'm going back to the practice platform. We structured the briefing note on the platform. Let's go down looking at the risk. Okay, evaluate the significant risks. That's what we are looking for. And let's make some space. We've already put the materiality statement on the briefing note on my Word file. Okay, evaluate the significant risk. Okay, we've done the partner email. So we need to open the exhibit number 2, business development. Okay, let's open the business development and keep the briefing note side by side. So it's the best practice in the exam that you keep 2 windows side by side, one the exhibit, one the briefing note, because every time the briefing note has to be open, you need to do lots of workings, lots of rough working in the briefing note. Okay, let's read the case quickly. Bransfield operates a chain of 95 luxury hotels. Revenue is generated from letting of hotel room, conference and meeting rooms. A 20% deposit is taken when booking is made. Now, for me, this is the first risk. 20% deposit is taken when you book the room. Why that is the risk? Because the revenue could be wrongly recognized. You can record the revenue at the time when the deposit is taken. You should recognize the revenue when the room is occupied and over the period of it is being occupied. So you cannot just recognize the deposit because the deposit is an advance. The room is not yet occupied. The performance obligation is not yet met, right? So under the revenue, my first point, a 20% deposit is taken when booking is made. There is a risk associated with this, and I'll be writing. So I'm going in the order of the case, right? So in the order of the case, this is the first risk I found from the case study. And the risk has to be case specific, right? You cannot find an hypothetical risk. Next, this year results shows a profitability. This year results shows a return to profitability for the company following several years of losses. So that's a dramatic change of the business, right? And that is one of the reason I kept my materiality at in between 5 to 10% because there are dramatic changes. Last year, the company was loss making. This year, the company is profit making. So these are dramatic changes in financial statement. And I cannot just keep it 10%. I cannot even keep 5% because 5% is normally for a first year audit. So I cannot keep 5%, right? So I just increase my percentage very skeptically to 7%. So 7 was better. Hotel trade journals shows that on average revenue in the industry has increased by 20% this year. So revenue has increased by 20% in the industry. Let's see how much revenue has increased for the Bransfield company. I'm taking this statement because it relates with revenue and I'm putting it under the revenue. Revenue in the industry has increased by 20% this year. And I'm putting a question mark and I'm saying, let's see how much revenue has increased for Bransfield. Now, this is what I'm doing in the reading and planning time, right? So when I go to the exhibit number 3, I'll see how much revenue has increased for the Bransfield company. So I've got 2 points under revenue. Okay, let's move further. Despite improved profitability, Bransfield company has a poor liquidity and is currently trying to secure further long-term finance from the bank. Currently trying to secure a long-term finance from the bank, control C. And this becomes my second risk in the order of the question, risk of management bias. Now, you cannot just write a journal risk of management bias. You need to link the risk of management bias, ROMB, with something very particular in the case. Do you all believe this will become an indicator? This will become an indicator for risk of management bias. Do you agree or disagree? Currently trying to secure further long-term finance. Do you believe this trying to secure will result in manipulation of the financial statement? And I need to find some examples of that. I need to find some examples from the exhibit number 3 from the financial statement. And if I can find those examples, I will put them down in my answer to fetch good marks. But you cannot just journally write a risk of management bias in the exam paper if that is not linked to the case study, if that is not case specific, right? So is this a case specific risk of management bias? Is this situation creating the risk of management bias, all of you? So try relating it. Currently trying to secure further long-term finance, right? Indicator. Move on. We got the second risk in the order of the case study. Okay, third paragraph. Bransfield company owned all of its hotel until the January 20X5 when 8 properties were sold to Larsen company. Now, this is a very important event which took place during the year. 8 properties were sold to Larsen company. Bransfield entered into a management contract with Larsen and is continuing to operate the 8 hotels under a 15-year agreement. See, who has the control over the hotels still is continuing to operate the hotels. Who is operating these hotels? Bransfield or Larsen? Despite the fact you sold them, who has the control? Who has the management control? Who has the management control, right? Bransfield. So Bransfield has the management control over these 8 hotels, right? Under the terms of the management contract, Bransfield pays an annual rental to Larsen Enterprises for 8 hotels, which is recognized in the operating expenses. So you are paying an annual rental to Larsen for using these hotels, and they're recognized in the operating expenses. At the end of the contract, Bransfield has the option to repurchase the hotels, and it is likely this option will be exercised. Now tell me, first of all, Bransfield continue to have the management control of the hotels, and they have the option to repurchase at the end of the 15 years life. And it is likely that this option to repurchase will be exercised. So is it a genuine sales transaction under the IFRS 15? Has the performance obligation met? No, because Bransfield is still holding the management control of the hotel, and the Bransfield company has the right to repurchase the hotel, and it is likely to be exercised. So has the risk and rewards transferred? No. The risk and rewards are still with Bransfield. The performance obligation has not been met. So under the IFRS 15, this is not a genuine sales. Rather, this is a sale and lease back arrangement. This is a financing arrangement. We need to recognize it as a financing arrangement, because at the end of 15 years, you will repurchase the hotels back. You sold them and you will repurchase them back after the end of 15 years. So the proceed you got from the hotel selling, is that more like a liability? The proceeds you got from the sale of the hotels, is that more like a liability, everyone? Is that more like a liability? Yes, the proceeds you got from the hotel sale is a liability for you, right? You need to recognize it as a liability because it's a sale and leaseback transaction, and you will use that proceed to buy the hotel after 15 years. You will even be paying the finance charges on that liability, right? I hope you know the treatment of sales and leaseback. Should we de-recognize the asset? Should we de-recognize the asset in a sale and leaseback transaction when we have the option to repurchase and we still hold the management control on the properties? Should we remove these 8 properties from the fixed assets? No. We should still depreciate them. We should still recognize them. And can we recognize the profit on the disposal of these properties when we have the right to repurchase and we still have the management control? No. You cannot recognize the profit. We have not sold them, right? This is just a financing arrangement. So let's see what the management has done. The management sold 8 properties. 8 properties were sold to Larsen Company, Control C, and that becomes my third risk in order of the case study. 8 properties were sold to Larsen Enterprises. Now that's becoming my risk number 3 in the order of the case study. And in the risk number 3, I'm just mentioning before I write my answer, this looks like a sale and lease back arrangement. Not a genuine sale, not a genuine sales. It's more like a financing arrangement, etc. Now I'll see the exhibit number 3, what the management has done. Has the management recognized the profit or not? Now you go to the exhibit number 3 to see what the management has done with the 8 properties. We'll see that later. Let's complete this next paragraph. In April 20X5, Bransfield Company granted the share options. Okay, they've granted the share options to executives, so on and so forth. So share options has been granted. That's another important event. The estimated expense, anything estimated is risky, right? The estimated expense of the share options recognized is 14 million. Is that something good that the management has recognized the share-based payment expense? But is there a risk that this 14 million could be wrong? It could be 15 million, it could be 12 million, it could be 20 million. Is there a possibility? Is there a possibility that this $14 million figure could be wrong? But has the management recognized the expense? Is that right? Yes. So what you need to understand here is the next risk. Share options. Share options becomes my risk next in order. The good thing here is that the expense is recognized. So that's wonderful. Expense is recognized, but what is risky? It is estimated. And estimated means this is the risk. It could be a wrong estimate. We know we have to take the fair value at the grant date to recognize the expense, right? The expense of the scheme is being recognized in the profit and loss over the 5-year vesting period. And it is currently assumed. See, assumed is a subjectivity that all options will vest. So management is assuming all options will vest. That assumption could be wrong. Assume all options will vest. What if all options will not vest? Will that be risky? Assume all options will vest. This is risky. Assumption. Management estimated that the expense is $14 million. The recognition of an expense is good, but the amount of expense could be more. Now we need to see how the management determined the fair value. Is there anything wrong in the fair value? The fair value has been taken at the grant date. And have you calculated the expense at each year end, taking account of whether the vesting conditions will be met or not? So let's see how we find the risk in the share options. But how much is the share options? $14 million. Is it material? Versus how much was the materiality level? The materiality level was $10.15 million. So is it material? It is material, right? It is material. So this should have been our first point, which we are missing, right? You should have prompted me for that. It is material. Okay. We'll see the sale and lease back. No value was given in the sale and lease back. We'll find the value from the from the third exhibit, right? Okay, let's go in the order. Last paragraph. In June 20X5, hotels situated near the major rivers were damaged by floods. So hotels were damaged by floods. No, this could be an indicator for an impairment. Hotels were damaged by floods in June 20X5. So that's a major risk. All the hotels which were constructed by Bransfield Company only 2 years ago needs extensive repair and refurbishment at an estimated cost of $15 million, which has been provided in full and recognized within operating expense. The estimated cost of $15 million has been provided, means you've recognized a provision against an estimated cost of $15 million in full and recognized them within the operating expenses. So you have recognized a liability, you have recognized a provision, you've recognized the operating expense for an estimated cost of $15 million. What is the accounting treatment? Can we recognize a provision for a future cost? Unless and until we have a constructive or a legal obligation. But normally, do we recognize provisions for any future cost? Because provision is a present obligation arising out of a past event. But can we recognize provision for any future cost? Tell me. No. Unless and until we have any constructed of legal, has the company recognized a provision for the estimated future cost to repair the hotels? Have they recognized them in full in the financial statement? Has the management done something wrong here? So management has recognized the $15 million, which is the estimated future cost in full. In June 20X5, the hotels were damaged. What is the year end of the company? September. So June, the hotels were damaged. July, August. Can we only recognize the 2 months expenses, 2 months cost, 2 months repair cost in this year financial statement? So we can just recognize the 2 months cost in this year financial statement, right? We cannot recognize the later. So $15 million is the estimated future cost. This occurred in June. So year end is September. July and August are the 2 months where the expenses could be recognized for this year. The remaining expenses should be recognized the next year. So that's one problem. Let's write the last risk. Damaged hotels. Damaged hotels. The first risk in the damaged hotel is $15 million, which is the estimated future cost recognized as provision. It is material because we know the materiality level is, it is material versus $10.15 million, which is our materiality level. Number two, risk number two. Let's go back. All of the buildings are insured. All of the buildings are insured. So we'll be getting all of the buildings are insured for damage caused by flooding. The repair work is expected to commence in August, that is before the year end. The repair work is expected to start in August. So that is the reason we just need to recognize the 2 months of expenses, August and September, and will be completed in December. So expense will be completed by December, right? So expense will start from August to December. So for current year, we can only recognize an expense of August and September. The later expense should be recognized in the next year. Now tell me, if the insurance company is willing to pay the amount and it is virtually certain before the year end, should we recognize it as a receivable in the financial statement? If the insurance claim is virtually certain, should it be recognized as a receivable? Yes. And if it is probable, then it should be disclosed as a contingent asset. What happened to all of you? If the insurance claim is probable, then we put a disclosure as a contingent liability. But if it is virtually certain, we do recognize receivables. So please understand that the claim has two outcomes, virtually certain or probable. If it is virtually certain, the accounting treatment is different. You will recognize the receivable at the year end from the insurance company. And if it is probable, not virtually certain, you will then put our disclosure in the financial statement. So can there be any further risk here relating to the insurance? Can insurance become another risk here? Insurance and the accounting treatment of insurance can become another risk, can become the risk number 2 under the damage total. And the estimated future cost recognized in full is the risk number 1. And then you go down. The hotels are currently closed and the repair is undergoing. Management has not performed any impairment review. Oh, that's a big risk because there was a damaged hotels. The flood damaged them. So the third risk is impairment. So impairment becomes the third risk. Impairment becomes the risk number 3. So how many risks are coming under the damage total? First, the recognition of the future cost as an expense, which is wrong. Second, insurance. If the insurance is claimed, what is the outcome of the insurance? Is it virtually certain? Is it probable? Third, management has not performed any impairment review, which is wrong. There was an indicator of an impairment. The hotels were damaged. You should have determined the recoverable amount. You should have determined the value in use. And you should have determined whether the recoverable amount is less than the carrying value. So you should have recognized the impairment. So plenty of risk coming under the damage total. Now, just before I wrap up things, look at the financial information, exhibit number 3 in front of your screen. And in the exhibit number 3, now let's relate things to our answer. Revenue. How much revenue has increased over the last year? Can anyone tell me? 713 million in the last year and 890 million this year. How much is the increase in revenue from the last year? Can anyone find and tell me the answer? 713 million last year and 890 million this year. So how much that has increased actually? 24.8%. Okay, 24.8%. Okay. Now, how much was the industry growing? Revenue in the industry has increased around 20% this year. And I put a question mark here and I said, let's see how much revenue has increased for Bransfield. So how much revenue has increased for Bransfield? The Bransfield revenue has increased by 24.8%. Is that significant over the industry? Even considering that some of your hotels were closed down during the year because of the floods damaged them. 3 of your hotels, right, were closed down because of the floods out of the total 95 hotels you have. So is there a risk that the revenue could be overstated because your percentage is above the industry, despite the fact there were 3 hotels closing down for operations, right? So we need to consider that. Okay, next. Other operating income, 135. There has been a significant increase in the other operating income. Let's see the reason. The other operating income for the year includes a profit on disposal from the sale of 8 properties. We have recognized the profit on disposal of the 8 properties. We have recognized the profit on disposal and the other income. It was a sale and leaseback transaction. It was a financing arrangement. We are not de-recognizing the asset. We are not recognizing the profit. The proceed we got from the sale of the properties should be recognized as a financial liability. So has the management done the right treatment by recording the profit on disposal as another income? Is that right? Is that wrong? That's wrong. So how much is the amount? Profit on disposal, 125 million. So 8 properties were sold. Now we're getting the materiality for the 8 properties sold. $125 million. The profit on disposal versus $10.15 million materiality. So it is material, for no doubt. And the wrong thing is that the profit is recognized in other income, which is wrong, because it is a sale and lease back arrangement. So we got the materiality for the property sold to Larsen Enterprises. Okay, the next. We got share options, we got damaged hotels. Look at the last note, deferred tax asset. Look at the deferred tax asset in the financial statement, note number 3. In the note number 3, we have the deferred tax asset at $285 million. Is $285 million material? Because we have another issue here, deferred tax asset, and deferred tax asset is $285 million, which is material versus $10.15 million, which is the materiality level, right? Now, we have seen the note number 1, operating expenses. Look at this. We have considered both the share-based payment at 14 million, and we've considered the damage to the property at 15 million. That this is the future cost which you have recognized this year, which is wrong. So we considered both the 14 and 15 million in our answer on the briefing note. We have considered other operating income, profit on disposal, note number 2, and note number 3 is a deferred tax asset. So note number 3, let's see what is the note number 3. The deferred tax asset represents unutilized tax losses which accumulated in the loss-making years from 20x1 to 20x4 inclusive. Deferred tax losses can only be carried forward to be utilized against the future profits. Bransfield Company is confident that the future profit will be generated in order for the losses. Now, is this an assumption? What if you don't have sufficient profits in future to set off the losses, and the deferred tax asset should not be recognized? Or you should restrict the amount of deferred tax asset to only the profits available. The company was loss-making last year, right? The company was loss-making last year. See the loss, $10 million. They just came to the profit. And in the profit of 145 million, we have recognized the profit on disposal, which is wrong. So how much is the realistic profit of the company? Is the realistic profit of the company 145? Or is the realistic profit of the company 145 minus 125? Tell me, which is right? What is the realistic profit? 145 minus 125? Is that right? So the realistic profit of the company is 20. So how long it will take for the profits to wipe off the losses, the previous year losses? Now, management is very confident the profits will be available, but we need to be very skeptical as an auditor, challenging the statements of the management to fetch our professional marks. We also need to be skeptical that whether the tax authorities allows the losses to be carried forward and for how many years. So can we utilize our skeptical skills here, challenging the opinions of the management? A lot of time the management use estimates, right? This is another estimate of the management. So management is confident, right? This is a statement of the management. Bransfield company is confident, copy paste. So management is confident. Now that is an estimate, right? So we need to be skeptical here, challenging the opinions of the management and fetching our professional marks. Wherever estimates are used, share options, estimate, risk, we need to be skeptical. So wherever the management is taking in any estimate, we need to be skeptical about it. Okay, we've done the exhibit 1, we've done the exhibit 2, we've done the exhibit 3. We've taken the numbers from the financial statement where possible. We have determined the materiality where possible, and that's putting us into the briefing note. Now, reading of the question is to be done in the first 24 minutes. Now, obviously, this is a webinar where we are discussing and solving and writing, which takes more time. But I hope you're getting the approach. I went top down. I went in the order of the case. I went para by para. Did I break the paras? I read every para of exhibit 2 in the order, and I formulated my briefing note in a logical flow, top down, because the logical flow will also give me a professional marks. The logical flow will also give me the marks for communication. I need to go in a flow of the answer. Then I go to the exhibit number 3. In the exhibit number 3, I saw some more risk. I saw the risk relating to other income, which I related with the property sold. And I found another risk of deferred tax asset, which I wrote in the last. Now, in the exam, because you're doing a computer-based exam, you can copy paste. You can move something up and down in a computer-based exam to change the order, because you need to prioritize them. Now, listen to one last thing before we take a break and write the answer, because I still need to write the answer for procedures as well. Now, when you are structuring the answer in a briefing note, before you start writing the risk, you also need to write procedures on share-based payment, and you need to write procedures on deferred tax asset. And I hope if you remember my lecture, I always tell you that the procedures have to be extracted out of the case. Now, I'll just copy the paragraph of share-based payment under the procedures, which was in the business development. I just copy this paragraph because this will help me write the procedures for share-based payment, Control C. And I copy my paragraph under the share-based payments. This is what exactly I'm doing in the exam hall, right? Because this will help me write my answer for procedures. Because after the reading and planning time, I should not go back to the exhibits. Whatever you want to copy paste, you want to remember, you want to note down, put it in the briefing note. After 24 minutes, you should have a good looking briefing note. You should have lots of copy paste in the briefing note, which you will rephrase, which you will restructure, which you will refine to write up your answer. So in the reading and planning time, please ensure you copy a lot from the exhibits to briefing note. Financial information, deferred tax asset. Copy the deferred tax asset and take it under the deferred tax asset on my procedure. Now see, under the procedures, I have a paragraph for share-based payment, and I have a paragraph for deferred tax asset, which I will utilize writing my 9 procedures. Then I need to write some climate-related discussions, which I've already covered in my video. And finally, you have to give a conclusion. Now look at this briefing note. Now, if I just take all of this on my Word file, which I will be sharing with you, now look at how things would be looking like. Procedures and conclusion, right? Now, just let me go to the next page. Let's put the answer down here and see how now things would look like. I got my rough working. I'll delete my rough working now because I don't need the rough working anymore. I'll also delete my rough working from the briefing note here. Once you're done with the reading and planning time, remove the rough working. so you don't forget to remove it at the end of the exam. Remove the rough working, right? Okay, go back to the Word file. Answer to the question number 1, briefing note to Finn Drake from the manager, subject audit planning, Bransfield Company, date the 1st of July. We wrote the introduction. After the introduction, we need to write the materiality statement. So I'm copying the materiality statement from here, and we go down, put the materiality statement under the introduction. After the materiality statement, we need to write the significant audit risk. I'll remove the 23 marks. I'll remove the exhibit 1 to 3 because I've taken information from there. We got the first risk, revenue, in order. And under the revenue, we got 3 bullets, which needs to be converted to a paragraph form for us to fetch most of the marks. So we'll convert this into a proper answer later. Second was the risk of management bias, which we got as the second risk. In this risk, we got the company is currently securing a loan. Then the third risk we got was 8 properties were sold to Larsen. We got some couple of statements under Larsen, which was given by the examiner, which will help us draft a paragraph for a 3 marks risk. Then we got a statement on share options from exam paper, a $14 million recognized. But is that adequate? Is that inadequate? We need to write an answer for that to fetch 3 marks. Then we got the fourth risk, damaged property. There are a couple of risks under damaged property. If we can just make them different. I think the first risk we got under the damaged property was the estimated future cost recognized, insurance, and impairment. So we had 3 risks. So we can fetch 3, 6, 9. We can fetch 9 marks from here. Then we had a deferred tax asset. And under deferred tax asset, we had that the management has recognized a deferred tax, but we are not sure whether future profits will be available. And that is it. Now, see, this is what you've done in the reading and planning time. Now it's just about prioritizing them, which risk will come first, which risk will come second. And I did mention in my video that you need to prioritize the first 2 to 3 risks. Thereafter, you can follow any order. But this is how you're writing. See, we got some percentages from the case study. This will impress the examiner. We got some materiality calculations done, which will impress the examiner. We will challenge the estimates of the management, will challenge the opinions of the management, which will impress the examiner. For procedures, we got the paragraph of share-based payment, which will help us write procedures. Deferred tax, which will help us write the procedures for deferred tax. Climate-related risk and discussion, already done in my previous video on YouTube. And finally, our conclusion. Are you all clear so far, so forth, with what has gone in? Now, in the last part of my session today, I will write some risk for you. I will try to justify where are we scoring the technical marks and where are we scoring the professional marks. I will be guiding you about writing a conclusion. I will be guiding you about writing the procedures. So out of 8 risks, at least I'll be writing 3 risks for you. So you have an idea. I will be prioritizing risk for you. How would you go about prioritizing the risk and so on and so forth. Now, just one last thing before I give you a break to all of you. If I go back to my presentation, I can just enable my camera for some time now. Okay. Now, we are almost reaching one part of our discussion towards end now, focused on audit risk, focused on procedures, focused on current issues. We saw that. We saw the materiality statement in the partner email covered. 10 professional marks, we're still into that discussion. Once I start writing the answer after a short break, I'll tell you how you're fetching the 10 professional marks. We've already structured the briefing note. We have marks for that. We have already assured that the signpost of the examiner, not to do this, not to do this, we have avoided that. We're fetching marks for that. We have determined the materiality. We have justified the basis of materiality. We're fetching marks for that, and so on and so forth. Changes in the marking scheme, I've just guided you. Now up to 3 marks are available for each risk. Now, whenever you see the total number of marks in exam paper, minus 3 marks on a safe side for materiality. So if you have 23 marks, minus 3, you're left with 20, and then straight away divide that 20 with 3. So to see how many risks are you writing for examiner. Now, how about prioritizing the significant risk, which I will be doing right after the break, but just one clarification on that. When you're prioritizing the risk, go in order of case. Have I gone in the order? Have I done this? I just took the order of risk which was given by the examiner. I didn't break the order. Revenue was coming first. Deferred tax asset was coming last. That is not my order. That is the order of the examiner. I tried going in the order of examiner. This is the best you can do. But if any student is breaking the order of the examiner, this is not professionalism. This is not professionalism. You are not fetching your professional marks because you're not demonstrating the risk in order. So order is important. Second, you can copy paste them up and down. Now, I can take the Larsen company risk first, for example. I can take the deferred tax risk from bottom to up. I can take revenue risk at number 3. I can just move the positions. Can I shuffle the positions? Can I shuffle the positions up and down? Tell me. Once I've wrote the things on briefing note, can I just shuffle them up and down? Is that something easier? But what is the first thing? The first thing is to write them in the order what the examiner has given you. Are you all following that? Are you all absorbing that? And the second is then you can shuffle them. I'll just show the shuffling right after the break. And you can watch my video on the significant risk I've done almost like 6 months ago. This is my video on the significant risk. Our risk is significant if it is case specific. We took all the risk which are case specific. None of our risk was on an assumption. Share-based payment, impairment, insurance, damaged properties, Larsen, property sold to Larsen. Every risk was coming from the case study. I didn't take any of my hypothetical assumptions. A significant risk is the one which is non-routine. I believe the properties you sold to Larsen company was a non-routine transaction. Selling of the property, is that something routine? Is that something happening on a daily basis, on a regular basis? Do you believe the sale of property was a more non-routine transaction? Tell me. What about the floods damaging the property? Is that more like a non-routine transaction? Flood damaging? Yes, but if your hotels are located in an area where floods come on a very regular basis, then that would not be a non-routine transaction. There are so many places in Pakistan and India where we do see high amounts of floods coming in the monsoon season, which is going through currently. And we do see significant damage to properties, but that is more like something routine. So you need to find that from the number of risks you have identified in the exam paper, which were non-routine. Judgmental. How many risks were judgmental? I think share-based payment, management estimated $14 million. Deferred tax, management is estimating there will be profits in future. Judgmental. Management was saying there is no need for an impairment. Management was not conducting an impairment review. Judgmental. Materiality. We can prioritize the risk in the order of materiality, which is the highest, which is the lowest. I think the highest level of materiality we got was $285 million deferred tax asset. The second after that was the sale of property, $125 million. And then I think we had the $15 million of the future cost. And then we had the $14 million. So can we categorize them in the order of materiality? That is also fine. And if there is any detection risk, which we found nothing in the case, right? We didn't found any detection risk in the case study at all, even though we're doing an audit risk question. So that's also proof, not necessarily that every time you have a detection risk in an audit risk question. If you find a detection risk in an audit risk question, this is the first year audit, you can take it at the top, priority. You can put it as the first risk. This is a first year audit, detection risk, audit risk, and you can put it at number 1. So there are lots of ways. How would you prioritize? You can prioritize on the basis of judgmental risk first. You can prioritize on the basis of non-routine risk first. You can prioritize on the basis of materiality risk first, and case specific, going in the order of the case. Are you all clear with this? So I'll do the shuffling after the break, and I'll give my justification of shuffling. And we need to write some of the answers. So you know how much you're writing for 3 marks. And I will be telling you how to write the procedures, because a lot of times students are confused with procedures, even though they have to come out of the case study. Tell me one thing before I give you a 10 minutes break. How was the session today? Have you benefited from the first 90 minutes? Have you got some clues of reading, planning, taking control of the case study, understanding the requirements, breaking them down, putting them on the briefing notes, how to read, how to extract things? Okay, and how many of you have done this mock exam prior to the session today? How many of you have gone into this mock exam prior to the session today? Okay. And if any one of you have not done the mock exam, is this mock exam giving you some ideas of the type of accounting treatments which has come in? Lots of accounting treatments have come in, right? We had the accounting treatments for provisions, accounting treatment for impairment, accounting treatment for recognizing a contingent asset, for insurance, accounting treatments for share-based payments, accounting treatments for revenue recognitions, IFRS 16, sale and leaseback, right? So it's not difficult to read and plan the first question in 24 minutes. You can do it. I've also done it. When I was doing it before the session today, so I just did it in like 22 minutes. But yes, when you're doing it in a live class and you're interacting with student, that takes some more time. Darshan, examiner is saying you are not required to consider the deferred tax consequences of a share-based payment. Examiner is not saying you're not required to consider the risk of a deferred tax asset. Deferred tax asset is a different situation. That is a note number 3 in the financial statement. But we know that when you recognize a share-based payment expense, there are also deferred tax consequences of the share-based payment expense because of the timing differences. So that is not to be considered. Examiner is not saying you should not consider the deferred tax asset. That is different. So you're confusing the consequences of a deferred tax arising from share-based payment with a deferred tax asset giving in the note number 3. I hope you're clear with that, Darshan. Right? So there are two different situations. You're confusing. Okay, let's take a break for 10 minutes. It's 8:33 p.m. Pakistan time. So we'll be back at 8:45 p.m. Pakistan time. And please do drop your feedback for the first part of the session. That would be really interesting to know how was the session today. I'm just writing here, break till 8:45 p.m. for 12 minutes. So back in 12 minutes at 8:45. Okay, welcome back, everyone. Just like a minute away from the end of the break time. So if you have any questions, you have an opportunity because we're just like a minute away from the break time ending. And I hope you can all hear me. Yes, related party is material by nature, right? So being related party is material by nature, you can classify the risk of related party at least under the quantitative materiality. First prioritize the quantitative materialities. Then under that, you can you can write the qualitative materiality. So never give qualitative materiality a precedence over the quantitative materiality from an examination paper. The quantitative materiality will come first in order. Followed by that, you can write the related party risk. Is that clear? No, you cannot set two materialities in the same financial statement. For one financial statement, there is one materiality, and the partner is telling us it has to be based on profit. So it is based upon profit. You cannot use any other materiality in the exam question. It is better to prioritize on the basis of materiality, yes. But yes, you can also put them in the order of the case, or you can put them in the order of non-routine or judgmental. There are lots of ways you can prioritize a significant risk with, which is right in front of your screen currently. Okay, so the break time is up. I hope you're all back. You can all hear me. Let's go back and let's start stretching the answer of the question. I put the answer we were structuring on my Word file, which is now right in front of you. Yes, I'm just showing you that, Rahul. Just give me a few minutes. I'll show you different ways of shuffling in the next 30 minutes. Okay, so the briefing note is in front of you. I'm not writing it on the practice platform. I'm putting it on the Word file, so I can give this file to you. So answer to the question number one, briefing note structured. Introduction, this is all part of the this is all part of your communication marks, putting the right structure of the briefing note to from subject date, introduction, then going in the order. This is all giving you professional marks. Then you come to the first requirement, evaluate the significant risk. Now I'm first writing the answers of few risks before I shuffle them up and down and tell you this is the way you can shuffle them in exam to prioritize them, right? But I'm first writing answers of few risks before we do the shuffling. Okay, the first risk we got was revenue. We got some points. I hope my voice is getting with clarity. I hope there is no distortion with my voice. You will have the materiality paragraph, right, in the order in the email from now onwards. So there is no chance you will not get that materiality statement of the partner, Beffy. You will still be getting it. Is my voice getting through to all of you? Okay, thanks. Let's move on. Okay, so revenue. Let's write a paragraph under revenue. The receipt of 20% deposit from the customers at the time of booking by Bransfield Company is prior to the occupation, is prior to the occupation of the hotel room. Thus should be classified as a liability, which is deferred income, right? The receipt of 20% deposit from the customer at the time of booking the hotel is prior to the occupation of the room by the customer, right? So thus should be classified as a liability deferred income because the performance obligation to recognize revenue is not met. So the condition, the performance obligation is not met till the time the customer occupies the room. That is not met, right? Yes, deferred income or deferred revenue, right? Unearned income or unearned revenue is the same thing. Because the performance obligation to recognize revenue is not met. If you're confusing, just change it with revenue, right? Because the performance obligation to recognize revenue is not met. There is a risk that revenue could be recorded. We're not sure. There is a risk that revenue could be recorded early. That is, the revenue could be recorded at the time of the deposit, which could, at the time of deposit, which will result in overstatement of the revenue and understatement of the liability. Full stop. We're not sure. See, this is how we write it. I started with an accounting treatment. The receipt of 20% deposit from the customer at the time of booking is prior to the occupation. That should be classified as a deferred income or a deferred revenue, a liability, because the performance obligation to recognize revenue is not met. The performance obligation will be met when the room is occupied. There is a risk that revenue could be recorded early at the time of the deposit, which will result in the overstatement of revenue and understatement of liability. Now, this is a statement. Now, this statement is worthy of 3 marks because up to 3 marks for each risk. I have a risk, I have a risk, I have an impact, I have an impact, risk impact, and I have an accounting treatment. I have an accounting treatment. So all attributes available. The attribute of a treatment, the attribute of a risk, that revenue could be recorded early. There is a risk that the revenue could be recorded early. That is a risk. And the attribute of under and overstatement. So 3 attributes present, right? Yes, obviously for revenue, there cannot be any materiality, right? I cannot find materiality for revenue because that's you find materialities when values are given like 14 million, 15 million, something like that. So in revenue, we just go with this flat statement. Now, there is a intelligent student in the exam hall who goes further and write a paragraph. Further, the Bransfield revenue has increased by 24.8% over the last year, which is significant, which is higher than the industry growth average of 20%, thus indicate that revenue could possibly be overstated. Revenue could possibly be overstated despite which is higher than the industry growth of 20%, despite the fact that 3 of the hotels were not operational due to flood, escalates the risk of overstatement in revenue. Extra. You will not get an extra 3 marks for risk, but this is where professional marks are coming in. Examiner would be happy that you found this percentage, you calculated this percentage. Now, this calculation of 24.8%, we know there is an extra half a mark for a calculation, for a trend identified, or for a calculation performed. So if you perform a calculation or if you identify a trend, you get an extra half a mark. So 3 becomes 3.5. Extra half a mark for a trend identified or for a calculation performed up to maximum 2 marks. So up to 2 marks are available if you do some calculations and trends. So this student, by writing the revenue has increased by 24.8%, which is higher than the industry growth, and he's linking it to the fact that 3 of the hotels were unoperational due to flood. He is relating the case. He's exercising sound judgments better than the first one. The first student was more into accounting treatment, more into early recognition, more into under and overstatement. The second student also went further, linking it with the 3 damaged hotels, linking it with 24.8% and going further. So at least he is fetching an extra half a mark technical, 3.5, but also he's fetching the professional marks of exercising good judgment, of doing a better evaluation. He did a better evaluation of risk. So I would believe the student would fetch the professional marks 1 plus 1. 1 is for better evaluation, and 1 is for the better judgment you took on risk being overstated. See, you wrote here, it escalates the risk that the revenue is overstated because it is rising by 24.8%. Look at these statements. No, there's no, every risk is now worth 3 marks. That's the new marking scheme, right? Every risk is now worth 3. Only detection risk, first year audit, risk of management bias. These are risks which can still fetch 2. But apart from that, any risk where you speak of accounting treatments is a 3 marks risk. Any risk where you speak of an accounting treatment is a 3 marks risk. I hope you're clear with that, whoever was asking that question. Rahul was asking that, right? Rahul, I hope you're clear with it. So, can you find a difference between a student writing the para 1 only and a student writing the further second paragraph? Is that what you should be doing actually in the exam hall? Look at the student writing further. So any student writing this further point is a brilliant student, right? And you're fetching more professional marks. So what I was discussing yesterday on the day 1, increasing the quality threshold of your answer. When you know the facts, you read the case, and we read the case together. And from the case, we got to know that the revenue rise of the company is more than the industry. Why not utilizing that point? Why not commenting on that point to impress the marker? So is the further point impressing the marker? Tell me, all of you. Is that what we got in the day 1? Impress the marker? Is the further point impressing the marker? And if you impress the marker, do you have greater chances of improving quality of your answer? Is there greater chances of getting professional marks more than the other students? Right? Okay, move down. So we got this, delete. Risk of management bias, the next risk, in order. Now, when you're writing the risk of management bias, this is a statement which gives you 2 marks in exam, right? Not 3. But see how you write a risk of management bias in the context of case. You say, Bransfield company is trying to secure a long-term finance, and is trying to secure a long-term finance which could potentially become an indicator for management bias. The Bransfield management can manipulate results to show better performance, to increase the chances of securing loan full stop. Look at this statement, right? Look at this statement of a student right here. You're simply saying that Bransfield is trying to secure a loan, which is given in the case, no doubt, which could become a potential indicator for management bias, no doubt about that. Bransfield management can manipulate the results to show better performance, to increase the chance of securing loan. Now, this student is fetching, probably you might fetch 1 out of 2 technical marks here. 1 out of 2 technical marks here, because you're not manipulating results with the case. Manipulate results is not linked to the case. But there is another student sitting in the exam hall who wants to take a nationwide position or a worldwide position in AAA. And he wrote after the full stop, the recognition of $125 million, the recognition of $125 million in other income, the recognition of profit on disposal of property, the recognition of profit on disposal of property as other income is an indicator, is an example of how management has manipulated results to boost profit by $125 million. Have they boosted the profit by $125 million by wrongly recognizing the profit on disposal? The recognition of profit on disposal of property as another income is an example of how the management has manipulated results to boost profit by $125 million. Now, this student has related the manipulating of result with an example in the case. Example in the case. Which is the better answer? One which is generally talking about manipulating result, or the one which specifically give an example of manipulating result? Which is the better answer? Stopping at the sentence 2 or stretching up to sentence 3? Try to feel which is impressing the marker. So this is what we got from the day 1, and I'm trying to demonstrate that today. I hope you got that day 1 connecting with day 2. On day 1, I was telling you, impress the marker. I hope you're getting the examples of how would you do it. So which student is in the better prospect of taking professional marks? The one who is relating it with the case, the one who is connecting it with the case, right? So the recognition of the profit here is a key statement. And you're fetching more marks for this. So risk of management bias with this statement can give you 2 marks, technical. And professional marks is subjectivity, but this is demonstrating your professionalism. You're exercising good judgments. You're doing a proper evaluation. You're giving an example. You know that there is a 125 million profit, which is wrong. Evaluation skills are coming here. Your skeptical mindset is coming here. You're trying to be alert. You're trying to be alert of the situations. Lots of skills going together. Move on. Let's draft 1 more, 2 more. And because we need to do procedures as well. Okay, now the next risk. We got 8 properties were sold, big one. 8 properties were sold to Larsen Company. Let's start this differently. A profit, a profit on disposal. A profit on disposal of 8 properties. Profit on disposal of 8 properties worth $125 million is recognized as other income, which is material to the financial statements at the materiality level, calculated above. You're not quoting the materiality level again, because you've already mentioned the materiality level in your paragraph number 1. The materiality level is $10.5 million. So you've put it here. So you're just relating it. A profit on disposal for 8 properties worth $125 million is recognized as other income, which is material to the financial statement at the materiality level calculated above. Just quoting the correlation. So the examiner knows, okay, this is material, fine. An examiner has already read your answer from above. Full stop. The accounting treatment of recognizing, full stop. The sale of properties is not a genuine sales transaction, as Bransfield Company continue to control the properties, and have the right to repurchase, which is most likely to be exercised. Thus, the conditions of recognizing sales are not met as per IFRS 15, right? We know the IFRS 16 revenue recognition supports the recognition criteria of revenue given in IFRS 15. So the sales of property is not a genuine sales transaction, as Bransfield Company continue to control the properties and have the right to repurchase, which is most likely to be exercised. Thus, the conditions of recognizing sales are not met. Full stop. The transaction is a sale and lease back arrangement, and the proceeds from the sale should be recognized as a financial liability. Proceeds from the sale should be recognized as a financial liability, and the asset should be recognized and depreciated. So you cannot just remove the properties from your fixed asset register. You need to record the proceeds as a liability, and the asset should be recognized and depreciated. Thus, currently, the liability and assets are understated. Thus, currently the liabilities and assets are understated because you've not recognized the financial liability and assets. Thus, currently the liability and assets are understated, and the other income or the profit is overstated. Full stop. See, we got every attribute for 3 marks. We got comment on the materiality, which is material, which is another additional attribute, number 1. We got the accounting treatment, that this is not a genuine sales transaction. We got the accounting treatment here. We got the risk that, this is not a genuine sales transaction. We got the risk and the accounting treatment. This is not a genuine sales transaction. This is the risk. And we wrote the accounting treatment here in this statement. Then we got that the transaction is a sale and lease back, and proceeds should be recognized as a liability, and this is the accounting treatment, and thus the liability, and thus this is overstated. We got this is a third attribute. So if you're writing an answer, now in the case of revenue, we didn't have materiality. We wrote the treatment, we wrote the risk, we wrote the impact. In the case of 8 properties are sold, we're writing the materiality, relating it with the materiality above. We're writing the treatment, we're writing what went wrong, what is the risk, because you recognize it as other income, which is wrong. And then we told what is understated and what is overstated. Now, every attribute is met to fetch 3 technical marks here. Now, because you're commenting on the materiality, because you are trying to tell examiner this is not a genuine sales transaction, you're demonstrating your professionalism. Now, again, this is up to the examiner, how many professional marks examiner would give you here. There was nothing extra here. You can also comment on because you might not be depreciating the assets because you de-recognize the assets. So the depreciation expense could be understated as well. So a depreciation expense could be understated because you have sold the properties, so you must have de-recognized them. So that's gone. The last one, and you do the remaining yourself. The share options, right? I think if I can do the damage totals, because in the damage totals, there are 3 risks. Which one should I do? The share options or the damage total? Because under damage total, we have 9 marks because there are 3 risks coming under the damage totals. Which one should I do? Okay, the damage totals, right? Okay, let's do the damage totals then, right? 15, first risk under the damage total. Let's put the subheadings. The first subheading under the damage total. Now, headings and subheadings are part of your communication skills. If you put proper headings and subheadings, it is beautifying your professional, it is beautifying your briefing note, and that will give you the communication marks. Okay, now listen to me carefully. Damage total, the first risk under the damage total, which you need to consider, right, in context. Now, the first risk under the damage total is provision, number 1, the provision of provision for repair cost recognized. The provision for future repair cost, the provision for future cost recognized. That's the first risk, right? So you write under this, the first one, $15 million has been recognized in full in the operating expenses, which is material to the materiality level established above. $15 million has been recognized in full in the operating expense, which is material to the materiality level established above. Full stop. After that, you tell provision cannot be made for future cost unless there is any constructive or legal obligation to do so. Provision is recognized when there is a probable outflow as a result of a past event. When there is a probable outflow as a result of a past event, not anything relating with future. Full stop. Now you tell, thus no provision is needed. Thus only the repair expense, there's only a repair expense for the month of August and September 20x5, because you started this expense in August, right? That is given in the case study in exhibit number 2, that you started this expense from August. So thus the only repair expense for the month of August and September 20x5 should be recognized in the financial statements of the current year. Thus, at present, the operating expenses and the liability is overstated. Have you recognized more expenses? Yes. Have you recognized more liability? Because you have recognized them in full, $15 million. Now, Thus, only the repair expense for the month of August and September should be recognized in the financial statement of the current year. Thus, at present, the operating expenses and liability is overstated as the full amount is recognized. If you want to tell examiner what is the full amount, I think you were starting from August up to December. August, September, October, November, December, 5 months. So out of the 5 months, you should recognize 2 months in the current year and 3 months in the next year. So if you want to do the calculation, you can tell examiner $15 million divided by 5 multiplied by 2 is equal to, what is the answer? $6 million. Thank you. So $6 million should be recognized this year only. So have you done a calculation? Have you done a calculation? $15 million in this into this, only $6 million should be recognized this year. Have you done a calculation? Will you get an extra half a mark for this calculation? So you will get extra 0.5 marks for this calculation, and you will be proven as a good student, and you get some professional marks too, because every time you do calculations, trends and ratios, I did mention that on the day one, will fetch you professional marks as well. So you have taken an effort telling examiner that $6 million is what to be recognized this year, and the remaining $9 million is to be recognized next year. Okay, the next risk, I'll just take on your questions. Let me complete the drafting. I'll just be taking on your questions in the last 5 minutes. Thank you. Okay, the second risk, apart from the $15 million recognized in full, which was wrong, the second risk is about insurance. So let's write the second risk here. The second risk is the insurance claim, because your hotels are under insurance claim, right? Now, under the insurance claim, insurance, it's given in the case study that insurance covers the amount of damage to the hotels due to flood. So you already have an insurance cover, right? Insurance covers the amount of damage to the hotels due to flood. If insurance company has formally notified to Bransfield, if insurance company has formally notified to Bransfield that the claim will be settled, but no amount is received before year end, then a receivable should be recognized. Then the receivable should be recognized because it is virtually certain. Right? So if the insurance company has formally notified you through an email or through a letter that we are willing to settle the claim before the year end, but the amount is not yet received before the year end, then a receivable should be recognized because it's virtually certain. If the receivable is not recognized, it will understate assets, full stop. Moreover, if there is no formal communication, by the insurance company, despite the fact we have covered this under the insurance, if there is no formal communication from the insurance company but the claim is probable, to be received. The claim is probable to be received or settled, then a disclosure of a contingent asset should be given in the notes to the financial statement. If no disclosure is given, financial statements will be materially misstated. So that is with insurance claim, right? So the damage of the hotel, the flooding of the hotel is already covered under the insurance. If there is a formal communication about the settling of the amount before the year end, but the claim has not yet been received, you will recognize it as a receivable. But if there is no formal communication, but the amount is still probable that you will be receiving it, you should be putting it under a disclosure of a contingent liability. The last one is impairment. The management has not carried out any impairment, right? So impairment becomes the third risk under this condition. So you put impairment as the third risk. Impairment. So it becomes the third risk under the same condition. The damage to the hotels due to flood is an indicator for impairment review. The management statement of not conducting an impairment. See, you are fetching your skeptical marks here, skepticism, sorry. The management statement of not conducting an impairment review is inappropriate despite the indicator being present, Now, this could also be the risk of management bias. They don't want to recognize the impairment because that will increase the expenses and reduce the profit. The management statement of not conducting an impairment review is inappropriate. See, you're challenging the statement. The moment you challenge the statement, you're fetching your professional marks despite the indicator being present, full stop. The management should determine the recoverable amount of the damaged hotels and ensure whether the recoverable amount is higher or lower than the carrying amount of the hotels to conclude whether the impairment loss is to be recognized or not. Thus, the operating expenses could be understated. If there was a loss needed but not recognized, operating expenses could be understated and the assets overstated, full stop. You're challenging wherever you find a statement of the management. For example, in the share options, the management was estimating, challenge. Wherever management is saying future profits will be available, challenge the statement. You know that the current year profit is not 145 million. The current year profit is 145 minus 125. Challenge the statement. Wherever you believe management is saying something wrong, management accounting treatment is wrong, write it in the tone as if you are challenging the statement of management to fetch your professional skill marks. So number of risk under damage total, 3 of them, and fetching you good marks. And that's how you're going down. You still have deferred tax asset to write, and so on and so forth. Now, just one last thing before we go on to the procedures, and I take on your questions in the last 10 minutes of my session today. Shuffling, prioritizing. Now, in amount of risk I wrote and the amount of risk I didn't wrote, at least I know the materialities of them. And even when I was doing my reading and planning, at the time of reading and planning, I did know the materiality. So revenue, no doubt, is a very important risk every time, because revenue recognition can affect the sales recognition, and the sales can hit your profitability directly, right? So if you just put revenue a bit down and look at something very specific to the case, securing loan and risk of management buys, 8 properties were sold. That's quite an unusual transaction. 125 million recognized, which was very significant and something unusual taking place this year. And number of properties sold were very significant. So to me, this has to be the number one because of the size of this transaction. I bring this up in terms of my priorities. See, this is, if I can just write it under here. Let me do this. Okay. Significant risk positioning. This is just my judgment, right? So I'll bring my first risk. If I'm writing my audit risk, this is how I would be bringing them. But again, you can have your own judgments. Don't just say why you did this, why you did that. Because if you take an exercising of judgment, the next question keeps coming in, why? So I'm justifying why I'm taking this as my first one, because it's significant, 8 properties, $125 million, and very extraordinary event in the year. Control C, the heaviest one, and I bring it down under the first one, my first audit risk. 8 properties sold. Next, the damage to the property, impairments, insurance claims, provisions not recognized. Quite a couple of risks under the damage total could potentially be the second one. But if I go in the order of the materialities, $14 million, $15 million, probably the deferred tax asset. Deferred tax is more regular because you had losses in the previous year. The deferred tax was also recognized in the last year. The deferred tax is also recognized this year. So is there something new which is happening this year? I think something happening new this year was share-based payment. So I should take the share-based payment, which is something new this year, putting it under 8 properties. Share options will become my second risk because this is something new taking place this year. It was not the last year. 8 properties were sold. This was not the last year. Now, deferred tax was there the last year, but that is still a significant risk. Impairment, insurance claims, and damage totals. Yes, damage total claims this year. So I can take the damage totals in the third position because this is something which happened this year. So I'm taking them down here as my significant risk, the damage totals. I'm taking the damage totals down here as number 3. Okay, after that, you can follow any order. This is what I mentioned even in my professional skill videos and in my lecture yesterday as well, that after the first 2, 3, you can take any order. Now you can put any of them. You can put revenue recognition, you can put the risk of management buys, you can put the deferred tax asset. I believe revenue, risk of management buys is better, and you can take the deferred tax at the end. Control C, and you bring them down under the damaged properties. So I tried picking up the new ones first, which happened this year, and something more routine like a risk of management buy, something more routine like revenue, I've took them later. And this is my reasoning of significant, right? You can have your own reasoning of significant. You can just go in the order of the values, but don't try to signify something which is happening the last year and this year as well. Try to signify something which was not the last year, something happening for the first time. Last 8 properties were sold, not last year. Damaged property, not last year. Try to bring them up front. Revenue recognition is a regular problem. Deferred tax asset is a regular problem. You can then bring them down. Even share-based payment came for the first time this year, needs to be prioritized. So that's my thought process of putting them in significance, right? So if you just put the first 2 or 3 in order, the rest can follow any order, and you have already attained your professional marks for that. I hope you're clear with it. Okay, just let's do a quick drafting of procedures, and then in the last 10 minutes, I will be taking your Q&A. If you have any Q&A which is not settled down, please put them on the WhatsApp group, and I'll be responding in the next 24 hours. But I'll give you good 5-10 minutes at the end taking on your questions. Is that clear? Is everyone sound so far what we have done? Yes, you can go in the order of the case as well, Hanan. That is also good. I did mention that in my PowerPoint presentation. The order of the case is also fine. But if you want to shuffle them down, it's so easy to shuffle them, right? Copy, paste, right? So yes, look at the number of marks we got so far, right? See, we got almost 3 marks on the sold of property to Larsen, 3 marks here. Damage totals, we got 3 marks extra for calculations. If you just look at the technical marks and leaving the professional marks a bit subjective, 3.5 marks I got for provision of future costs not recognized because I did the calculation. So that's 6.5. Insurance claim, 3 marks. That's 9.5. Impairment, 3 marks. So that's 12.5. Then I wrote revenue, 3, 15.5. And another half for this 16, because I did a calculation, 16. Risk of management bias 2, 18. I already got 18 marks out of 23. I did calculate materiality at the start. I did comment on the materiality where possible. So I'm fetching those materiality marks. A couple of times I wrote, this is material, this is material. I did calculate the materiality at the start of the briefing note. So I have fetched my 3 professional marks as well. So 18 plus 3 is 21. So another 1 risk you write and you're fetching your 23 marks. Either you write the share option or you write the deferred tax asset, because we wrote so many risks under damaged property. If you're not writing 3 risks under damaged property, then you have to write the share options and the deferred tax assets to complete the number of marks. I hope you're clear with that. Okay, should we start writing the procedures? No, you're not writing the materiality statement. See how I wrote the answer. I simply said, this is material as per the threshold calculated above. So you just refer to the materiality calculation you have done above. I'll be sharing this answer with you, right? Just read the answer, just see how I wrote the statement of materiality. You have to do exactly the same. Okay, is everyone ready for procedures? Yes, headings and subheadings are very important, right? Damaged property was a heading. Under that heading, I put insurance claim. Under that heading, I put provision for future cost. So if under one risk, there are multiple risks, you can put the subheadings, right? Okay, so should I move to procedures, everyone? Okay, let's draft the procedures. Now listen to the procedures very carefully, right? I hope you remember my mnemonic, which I've given a couple of times in my webinars and in my online classes, that whenever you are writing a procedure, it has to follow a mnemonic of CASP. And I'll be demonstrating that now. You write them down here, procedures, right? You're writing procedures for 9 marks, and we know every procedure is worth 1 mark, 1 mark per procedure, 1 mark per procedure. So is equal to 9 maximum procedures you're writing. Now it's up to you for which you need to write more, for which you need to write less. Irrespective, a total has to be 9. Share-based payment plus deferred tax, total 9, not 9 for share-based payment, not 9 for deferred tax asset. You can write 4 for share-based payment, 5 for deferred tax asset. You can write 6 for share-based payment, 3 for deferred tax asset. But you cannot say, okay, I'll write 9 for share-based payment and 0 for deferred tax asset. That will be wrong. That will be absolutely wrong, right? Okay. Now, when you're writing a procedure, for example, I copied the paragraph of share-based payment from the exam paper. Now you're doing a computer-based exam, and you copied this paragraph on your briefing note in the practice platform, and you start thinking about CASP in the exam. And once you write the procedure, you will delete the paragraph above. Okay, you think about CAST and you start writing your procedures, and you will delete whatever extra is here from your briefing note. Procedure number 1, the first CAST, case specific, action, source, purpose. In April 20X5, Bransfield Company granted the share options to executives and senior management of the company as a way of providing performance-related rewards without impacting cash flows. Now, this is a management decision, case fact. I would review the board minutes to confirm the approval, and not just the approval, I would also confirm the conditions, the vesting period, the conditions attached to the share options, how many share options are given to each executive. Everything will be clarified from the board minutes, right? So I'll just simply review the board minutes. Number 1, review the board minutes to confirm the approval of the share options to executives, and also to confirm the vesting conditions and number of options given to each executive. So a lot of things will be verified from the board minutes. So do I have an action? A, yes, I have an action, review. Do I have the source? Board minutes. Do I have the purpose? I have the purpose, right? To confirm, I have the purpose. And is it case specific? So is my first procedure meeting the definition of a CAST? Yes. Second, the estimated expense of share options at 30th of September is 14 million. So the estimated expense. Now, who estimated that? This is not a listed company. So you must have hired an expert, and the expert must have determined the fair value of the share options at the grant date, because this is not a listed company. Otherwise, the fair value of the share options would have been easier. Bransfield is not a listed company, right? CAS, C is case specific, A is action, S is source, and P is purpose. Okay, review the board minutes. The second, estimated expense. Review the report of an expert for review the report of an expert to conclude, to review the report of an expert to confirm the assumptions taken in determining the fair value of the share options at the grant date. Review the report of an expert. This is not a listed company, right? So review the report of an expert to confirm the assumptions taken in determining the fair value of the share options at the grant date. Full stop. So you will look at the assumptions, you will confirm the assumption. Review is an action. Report of an expert is a source. Confirm is the purpose. So you got the estimated expense, right? So this estimated expense must be coming from a report of an expert who must have determined the number of, who must have determined the fair value of the share options at the grant date. Further, you can think about recalculating the expense, recalculate the share, recalculate the expense to confirm its accuracy, to recalculate the expense to confirm its accuracy, right? That's a short procedure. Recalculate which expense? The share-based expense to confirm its accuracy. Okay. The expense of the scheme is recognized in the profit and loss over the 5-year vesting period. It is currently assumed, management, that all options will vest. It's quite risky. What if all options will not vest? So management is believing that there will be a 0 staff turnover. Because if you believe all options will vest, that means there is a 0 staff turnover. Agree or disagree? Tell me. Management believe all options will vest, right? So there is a 0 staff turnover. It could be realistic, could be unrealistic. So if the management says all options will vest, what I need to do? Discuss with the human resource management. Discuss with the human resource management the staff turnover ratio, the staff turnover ratio in past to confirm the reasonableness, of a zero staff turnover, to confirm the reasonableness of the zero staff turnover to ensure all options will vest. So I will ask the human resource director, can you confirm that the staff turnover ratio is 0 in the past? If that is the case, that will confirm that all options will vest. I can also look at the future forecast, review the forecasted staff levels, to confirm that there are no significant review the forecast staff levels to confirm there are no significant declines in staff levels. There are no significant declines in staff level in future to confirm the assumption of a zero staff turnover. If you look at the future forecast and you find in the future forecast for the staffing level that the number of staffs are going down each year, now that will increase the risk of a staff turnover rising. So if that is not the case, then the management assumption is fine. No significant decline in staff levels in future to confirm the assumption of a zero staff turnover to ensure all options will vest. See, every procedure of mine is starting with an action. It's coming out of the case study. I made a procedure. It is assumed that all options will vest. So that means there will be zero staff turnover. So I look at the prior history of zero staff turnover. I look at the future of the zero staff turnover. The estimated expense, I look at the report of an expert and I did recalculated the expense. Management has granted the share options. I look at the board minutes. So case specific. Recalculate the share-based payment expense to confirm its accuracy. Accuracy is the purpose, right? Accuracy is the purpose. See, every procedure has a purpose to confirm. Every procedure is starting with an action and every procedure has a source. Board minutes, report of an expert, recalculate the share-based payment expense. Share-based payment expense is the purpose. Sorry, is the source, source. Which expense? Share-based payment expense. Human resource management is the source. Forecast staff level is the source. Yes, the staff turnover ratio will be known from the HR management, right? Who else will tell us? The human resource management knows the staffing level and the turnovers, right? Okay, is everyone clear with the procedures? Is that something difficult? I always find procedures in AAA pretty easier if you know the techniques. So now you can remove this paragraph from your briefing note and the CAS. See, if you remove this paragraph, see how good the procedures are looking. The procedures under the heading of share-based payment. See, 5 of them out of the total 9. 4 procedures can come for deferred tax. Is everyone clear? Is that difficult? Let's write few for deferred tax. I will not be writing all 4, but let's do the same practice on deferred tax asset. Now, when you're writing procedures for deferred tax asset, 6, 7, 8, 9 procedures, you go in the order of 6 now. Number 6, the deferred tax asset represents unutilized tax losses which accumulated in the loss-making period from 20x1 to 20x4 inclusive. Deferred tax losses can be carried forward. Now, first of all, I need to review the tax laws, review the sorry. You can review the tax laws. You can review the tax laws to confirm whether the losses can be carried forward. Can the losses be carried forward? Can the losses be carried forward? Or if yes, for how long? For how long can they be carried forward? Because these are losses from 20x1, 20x1, 20x2, 20x3, 20x4. 4 years, we are in 20x5. So look at the loss of 20x1, and we are standing in 20x5. You already carry forward it for 4 years. So review the tax loss to confirm whether the losses can be carried forward. If yes, for how long? So deferred tax losses can only be carried forward to utilize against the profit generated from the same trade. Bransfield Company is confident that future profits will be generated. Now, you need to discuss with management their confidence level. Discuss with the management the basis of their confidence level that future profits will be available to set off the prior year losses and the level of profits available. How much would be the level of profits available? If you have very low profits, then setting off will take a lot of time. Suppose you have very low profits in the next few years, that will take the set off time too much. But if you have good profits, the set off can be done quickly. You also need to assure that this year profit is 145 minus 125. So discuss with management the basis of their confidence level that the future profits will be available to set off the prior year losses and the level of profits available to confirm the reasonableness of management confidence. So you're discussing and confirming, is the management confidence good or bad, unrealistic or realistic? You can also review the profit forecast. Review the profit forecast. Review the profit forecast to confirm the amount of profits which will be available in future and the realisticness of assumptions used by management. You can review the deferred tax working. You can review the deferred tax working of the management and agree the figures used to underlying records, something like that. Or you can also recalculate the deferred tax asset, recalculate the deferred tax asset after you know everything. Recalculate the deferred tax asset to confirm its accuracy. So you can also do that. And finally, because there are so many assumptions involved here, you can obtain a representation letter. Obtain a representation letter from the management. Obtain a representation letter from the management to confirm the completeness of the assumptions used in determining the deferred tax asset. Full stop. 11 procedures, we need 9. And honestly tell me, did I wrote anything out of the case? Do I need to go in the exam hall with the rote learning of the procedures from BPP and Kaplan book? There is so much in the case, right? The case is telling deferred tax losses. The case is telling you about deferred tax losses. So you can look at the text laws. Management is saying profits will be generated, so you can review the profit forecast. You can discuss with management the basis of profit available, so on and so forth. Have I wrote anything out of the case? Honestly, tell me. Is it not writing? Is it not easier to write it? You can write assertions like accuracy and completeness naturally. See, at times when you're writing a procedure, you abruptly write accuracy or you write completeness. You are not writing an assertion-based procedures in AAA, just like you used to write in the F8 paper, Rahul. But when you calculate something, what is the purpose? Accuracy. And when you take a representation letter from the management, what is the purpose? To confirm the completeness of the assumptions. That's quite natural, right? Okay, the last thing, you do the climate related risk yourself. I've already done that in a video. A conclusion is important to wind up the briefing note. Now, when you're writing the conclusion, you are concluding on the main findings of the briefing note. Now, what are we finding in the briefing note? Risk, procedures, and climate related risk. So you just need to wind up on the main things. The main things is the risk or perhaps the climate related risk. You're not just winding up everything. Conclusion is just 2 to 3 sentences long. See how you write a conclusion. This briefing note identified, now you're writing in the past tense, concluding. So whenever you're writing a conclusion, the conclusion has to be in the past tense. This briefing note identified significant audit risk in the upcoming audit of Bransfield Company, such as the issue of sale of property, and damaged properties, etc. Not writing every one of them, not writing all 8 of them. Whichever you wrote first, 2. Giving example. This briefing note identified the significant audit risk in the upcoming audit of Bransfield Company, such as the issue of sale of property and the damaged properties. Full stop. Or the damaged hotel. The damaged hotel properties. Full stop. Further, this note also identified procedures to mitigate risk in areas of share-based payments and defer tax asset, because the procedures are made for mitigating the risk. Further, this note also identifies procedures to mitigate risk in areas of share-based payment and defer tax asset, and also focused on the approach the audit firm should take in context of the climate related risk. Full stop. See, just this much. You're just giving a conclusion. So the way you write an introduction, that I have to do this, I have to do this, I have to do this, on the same way you're writing a conclusion that these are the significant risk. The procedures have been done to mitigate the risk. You're just changing the tone when you're writing a conclusion. The length of a conclusion and a introduction should ideally be the same. Conclusion. Now look at things wrapping up in next 5 minutes and ending the day. Now listen to me for the next 5 minutes very carefully. Now today, on the second day, we opened the question 1 from the mock exam, which consisted of 3 important requirements, A, B, C, which has 4 exhibits. We did made use of the 3 exhibits, and the 4th exhibit was covered in my previous video on the climatical risk, so I just ignored that. we structured the briefing note. Now we know in the question number 1, we have 4 professional marks to be attained out of the 10 professional marks for the communication skill. Now, in terms of my analysis, what I have done here in the answer, if I can just give me 1 second. If I can just put in my conclusion here. If I can just give my conclusion on marks here. Try to understand. In terms of my 10 professional marks I'm talking about, right? 10 professional marks. You know how to take your technical marks. I'm not worried about it. First of all, in 10 professional marks, in question number 1, 4 were for communication. Now, you did fetch most of your 4 marks for communication because, number 1, you did put the briefing note in the right format. You did had an introduction and a conclusion at the end. You did followed the logical flow. You did followed the logical flow of requirements from A to C in order. That is very important. You did used headings and subheadings, and you avoided not to do something. You avoided not to do something which the partner asked not to do. So you're fetching that as well. So you tried doing justice with your communication skill. You tried and ensured everything was put in the logical manner. You avoided not to do something which the partner asked not to do. So you were attaining most of your communication skill marks here. And this is exactly what I guided you in the video. Secondly, lastly, for remaining skills like acumen, skepticism, I'm using the one word, right? Not the full jargons. Acumen, skepticism, and evaluation. Evaluation and judgment, right? And evaluation, judgment. For remaining skills, you did attain marks for number 1, challenging the opinions, challenging the statements of the management where possible by commenting on materiality and justifying the use of $10.25 million and justifying the use of $10.25 million as a threshold in your answer. That was very important, justifying. By exercising right judgments where possible, what is understated and what is overstated where possible, like the impact of risk, on financial statements, writing case-specific audit procedures, not writing irrelevant procedures, That's also part of commercial acumen, right? Writing reasonable procedures, writing technical procedures, writing procedures which the audit firm can realistically do. Taking sound judgments is also part of commercial acumen, right? So writing case-specific audit procedures, not writing irrelevant procedures, using calculations, trends where possible. You did that as well in your answers, etc. So lots of things have gone in the answer, right? This is all what we did try to justify for attaining most of our marks. The bottom line is improving the quality stretch of your answer. This is something we were discussing yesterday. So please ensure that whenever you're writing the answer, you try to reconcile that what extra you did. Did you exercise the right judgments? Did you challenge the opinions of the management? Whatever was guided to you in the individual videos on professional skills, whatever was guided to you in the checklist on the day one yesterday. Now, just one last thing where I believe someone can raise a question. We did justify the use of 10.25 million as a threshold for materiality, right? Now, all of you know at the end of this webinar day 2 today that this materiality level we determined at the start of the answer, which was 10.15 million, was based on a profit of 145 million. Now, by this point in time, when the webinar is ending, you know that this profit should ideally be 145 minus 125, right? Now, that is adjusted profit. Now, if any student wants to determine the materiality on an adjusted profit, whatever you have concluded down, for example, you concluded down that the profit is material, you concluded down share options are material, you concluded down the $15 million is material, you concluded down the deferred tax asset is material. Even if you take the adjusted profit, which is 145 minus 125, still your conclusion on individual material areas will remain the same. That will not change. So examiner is happy with both. You want to go with adjusted. See, in the exam pressure, at times it's very difficult. See, I was doing my webinar. I could have given you the answer on the adjusted profit, but I purposely didn't give you an answer on the adjusted profit because I just want to go with the student psyche. That in the exam, you will first look at the profit number, but after reading the case, after understanding the case, you might understand that the profit is to be adjusted. If someone writes the adjusted profit and determine the materiality on the adjusted profit and justify the use of the threshold, wonderful. But if someone goes with 145 million and you try to justify this is not the first year audit, this is the fourth year audit, we should take something between highs and lows, and 7% is the better threshold, that's also fine. You're not being penalized for anything here, right? So it's up to you. You are clever, you are alert, you can use the adjusted profit in the exam. Otherwise, you can use the unadjusted profit for determining the materiality. Right? So I hope the day 2 must have benefited you all in terms of learning, understanding lots of things in terms of reading, planning, writing, gaining marks. In the last 3 hours, I hope lots of discussions have been gone in. Marking scheme, 3 marks per risk, extra half a mark for calculations and trends, 2 to 3 marks for materiality in the exam paper, number of risks you should be writing. I hope you must have benefited from the day 2 of this webinar, and more exercise on demonstrating commercial acumen, analysis, skepticism, judgment comes on the day 3 and day 4 as we look into the question 2 and question 3. So I hope by the end of the 4th day, your approach to professional skill will be better. So you just started it. By the end of the day 3, by the end of the day 4, you will feel the confidence in terms of understanding professional marking scheme and gaining them. So I hope you all benefited that. Yes, only the adjusted profit is only with one adjustment, right? Which was very clear in the case Hanan, 125 million. because we were very sure that that 125 million is wrongly recognized. So you will only adjust the profit for something you're sure of. Otherwise, you will never adjust the profit. So it's better in the exam, Hanan, to go with unadjusted profit, because the students otherwise can make a blunder even if they're adjusting the profit. Right? You will get this Word file. Don't worry about it. So if you missed anything on the Word file, you will be getting it. Okay, so how was the day today? If I missed on any questions, please put them on the WhatsApp group, Rahul. I know you are very skeptical. You're already exercising the skeptical skill very well. And I hope you will be demonstrating that well in the exam paper as well. So please, if any question I've missed out, Rahul, please put them on the WhatsApp group and I will be responding in the next 24 hours because we're just overrunning time. I hope this day was productive. If you can just drop a quick feedback for the overall day and your confidence level coming out of the day two. How was the day two and how much you benefited from the day two? If you can just drop a quick short sentence just before I wind up the webinar. Thank you so much, Rahul, Darshan, Joseph. And I hope this will go down in your practice for the next 13 days you have before exams, right? Okay, thank you so much, all of you. I'm winding up from the day two then. We had quite diversified discussions on day two. And again, time limitations. Please ensure this video on significant risk is watched, which is on my presentation slides. And please ensure you're getting your clarity on the materiality statement coming in the partner email, and you know how to draft it. And changes in the marking scheme, like 3 marks per risk, except for risk of management bias or except for a detection risk, these statements are still worth 2 marks. So I hope you got some clarities out of the day two. That is it. I'll see you back with the day three tomorrow. The agenda is to look at the question number 2 of the mock exam and more insights on the professional marks, marking schemes, and that is where you all need to become excellent at. Wish you all the best of luck. Take care. Goodbye and Allah Hafiz. Your tutor Kashif Kamran signing off from the day 2 of the webinar to success. Goodbye and Allah Hafiz, all of you.